Hello and welcome to Quilachieve's Markets Uncut podcast, your weekly insight into the topics and issues that we have been discussing here at Quilachieviate. I'm Andrew Cartwright, investment manager based out of our Birmingham office, and I'm delighted to be joined once again by our resident market commentator and head of fixed interest, Richard Carter. Welcome, Richard. So last week was a busy one in terms of economic and political updates, but to kick off, the 2024 UEFA Euro Championship got underway with a fairly comprehensive win for the host nation Germany in what was always going to be a tough opening game for Scotland. And staying within Europe, the European Central Bank was, of course, the first of the major central banks to finally cut interest rates a couple of weeks ago, whilst we still patiently wait for signs that the Bank of England and the US Federal Reserve will at some point follow suit. So we had various economic reports released last week, both in the UK and the US, which might help shed some light on that time scale. And starting off in the UK, the Office for National Statistics announced that economic growth has somewhat stalled, with zero growth reported for April. And this compares to 0.6% in March, which was in keeping with the overall growth rate for the first quarter of the year. We also had various labour market reports, including wage growth, which remained strong and unchanged at 5.9% in April and in line with analyst expectations. But whilst wage growth remains buoyant, there are some signs that the labour market is cooling. There's a slight increase in headline unemployment and a decrease in job vacancies also reported. So, Richard, that economic growth figure wasn't great news and certainly not what Rishi Sunak would have been hoping for. And those various labour market reports seem to me somewhat mixed. We have got the next UK inflation update due this week, which comes ahead of the Bank of England's Monetary Policy Committee meeting on Thursday. So what was your take on the data from last week? And perhaps more significantly, what do you think we can expect from the forthcoming inflation report and how that might influence the Bank of England's decision and the trajectory for interest rates?
Well, I think you're right, Andrew. The economic reports we had last week in the UK aren't exactly that favourable for Rishi Sunak. That's definitely right. But I think some of it you can take with a pinch of salt. I mean, the sort of growth data is clearly held back by sort of bad weather, and with the labour data, there's quite a lot of doubts over the UK's sort of labour statistics at the moment about exactly how they're compiled. But I think so no one's getting too concerned about it yet. But definitely, it does seem that there's a little bit of weakness coming through, albeit with wage growth still pretty elevated, which obviously is probably the big thing as far as the Bank of England's concerned. I mean, I think there's like you say, inflation data this week and the Bank of England's rate decision. I mean, hopefully the inflation numbers are going to keep moving in the right direction. They were a little bit disappointing last time around, still very quite strong on the services side, but the market's actually expecting CPI headline to hit 2%. So that would be excellent news if that happens. But we'll have to wait and see if we get a disappointing number again. But I think overall that number will probably set the tone a little bit for the Bank of England meeting on Thursday. It's too early to cut rates this month, but if we see a sort of weak inflation print, it's possible that then August becomes into play and we could see a cut then. So yeah, definitely be watching to see what Governor Bailey has to say. But I think we're getting there. It's just not this month for a rate cut.
So just turning our attention now across the Atlantic, and whilst we wait for that inflation update for the UK, that inflation data was released last week, and that saw inflation fall to 3.3%, slightly better than the 3.4% that had been forecast and expected. So, Richard, again, we weren't perhaps expecting an interest rate cut in the US this time around, and indeed the follow-up to that update, interest rates remained unchanged at 5.25% to 5.5%. But what perhaps was more significant was the Federal Reserve, and despite the overall positive inflation news, they signalled that there could just be one interest rate cut this year. Again, that would be a more conservative approach than financial markets that are perhaps anticipating or hoping for. So what are your thoughts on what is happening in the US? And so we did have a bit more definite information last week. And how did the markets react to the Federal Reserve's comments?
Yeah, it was interesting. They moved this, this dot plot that people talk about a lot. They moved it from showing that they thought there'd be 3 rate cuts this year down to just one, which is potentially quite hawkish and just shows how resilient the US data's been. Not just inflation, but particularly the job numbers have just been too strong for them to cut rates. So it kind of made sense that they pushed back their forecast for sort of rate cuts this year. You also got the election obviously coming up in a few months as well, which could complicate issues. But it was interesting that the market, on the back of the inflation numbers, kind of chose to a little bit discount what the Fed was saying, saying actually, with these inflation numbers looking slightly better, your forecast of 1 cut might turn out to be wrong. You might be able to cut by 2, and in a way, the Fed is data dependent. If the data weakens, they'll change their story, and I guess that's what the market's betting on. But I think after a run of strong inflation numbers in the US, it's encouraging. I think that the data is starting to weaken a little bit. So again, similar story to the Bank of England. Too early to cut rates now, but potentially getting there in the next couple of months or so.
Thanks, Richard. So in last week's podcast, we heard Simon Doty and Richard talk about Macron's decision to call an election in France, and with the UK and US both go to the polls this year. Politics is very much at the forefront of everyone's mind. It was interesting that election could open a door for the right wing of France and even potentially for France to leave the EU further down the line. So Macron's approach does seem somewhat risky, and it certainly backfired for David Cameron over the vote to hold a Brexit referendum a good few years ago. What was interesting last week, we saw Nigel Farage's Reform UK party overtake the Conservatives in the opinion polls, and perhaps that could be viewed as a sort of shift to the right. Could this just be coincidence, or perhaps considered a protest vote? Or could this potentially be part of a sort of wider trend and an underlying shift to the right and rise in nationalism in Europe, and perhaps play a part in that investment theme of an underlying trend away from globalization?
Yeah, this is an interesting one. So I mean, the UK situation with Farage, I think a lot of it is just the Tory party realignment kind of falling apart a little bit, and obviously Farage is probably more popular with most Tory voters than Rishi Sunak. But even if he is doing well in the polls, it still suggests they're only going to pick up 1 or 2 seats at best, and actually the bigger picture will be Labour with a massive, a centre-left government with a massive majority to do what they like, for the next few years, while the Tories basically sort themselves out. And I don't think the sort of drift to the far right in the UK is much of an issue. As I say, it's more of a just sort of realignment of the Tory party. The French thing is more concerning to me because it's in some ways a little bit come out of nowhere. We expected a protest vote, like you say, in the EU elections, but then we didn't expect Macron to then call a general election off the back of it. And time will tell whether it was just a protest vote, but the polls do not suggest that's the case. Unfortunately, Le Pen's party is well ahead in the polls, and the far left also doing pretty well. So it's become quite fractured, and what that's going to lead to after the election is anyone's guess. But certainly, probably be a sort of far right coalition, potentially more centrist parties. But there's a lot of worries about French sort of deficits and debt dynamics and where that could lead. And as you say, does that then call into question longer term France's position within the euro and the EU? I don't think we're there now. And Macron obviously still going to remain president for a few years, but clearly the drift to the extremes in France is a concern. And yes, deglobalization, all the rest of it, potentially, less immigration into Europe, more disagreements with the EU, just more uncertainty, I think. And we certainly saw the market build in a bit of a risk premium to French assets last week and the week before. Seeing things like French bond yields rise quite sharply relative to Germany. So that is a concern. It recalls the sort of dark days of the euro crisis a little bit, although it's still early days. But it's going to be interesting to see how that election pans out. Everyone will be hoping for some sort of certainty and safety in France in time.
Yeah, and interesting to see whether that sort of starts to spread to other parts of Europe as well. So finally, Richard, Euro 2024 is now well underway, and most of the big footballing nations have got off to a winning start. Now, you're a Spurs fan, and there are some, including our own chief executive, Andy McGlone, who might therefore question your footballing credentials. But who is your money on to lift the trophy?
Well, I think being a Spurs fan, it's sort of you might question my footballing credentials, but not my ability to live with disappointment and travel more in hope than expectation. I think being a Spurs fan, being an England fan, is quite similar actually, because we often flatter to deceive before getting knocked out by the bigger teams. But I think you can't look past France. I mean, obviously Germany and Spain have got off to a good start, but I think the French have got the experience in big tournaments. Normally, they've got an amazing squad, very few weaknesses across the whole squad, unlike England, who probably got a better attack and defence. So my money it's a bit consensus, I think, possibly, but my money's on France for now. But who knows? Maybe England will stage an upset, but we'll see.
Indeed, and you can never rule out the Germans as well, particularly on home soil. So, Richard, thank you very much for your insights today. And before we draw to a close, if any listeners have any questions that they would like to ask one of our experts, our analysts, for a future podcast, you can put forward your questions to our team by submitting them via the Weekly's comment page on our website. We'd love to hear from you. And to stay up to date with our thoughts on markets and current issues, please visit our website at www.quiltachieveit.com. And here you can see more of what we're doing at Quilter Cheviot, as well as watch past webinars on demand and subscribe to our weekly comment newsletter. So we'll be back again next week. And in the meantime, for those of you on social media, you'll be able to see an up-to-date content on our Facebook, Instagram, Twitter, and LinkedIn pages. So thanks again to our head of fixed interest and chief football pundit, Richard Carter, for his insights today, and to you all for listening.